the market prognosticator.
US GDP growth in Q3 has been revised upwards to 5.2%, primarily interpreted as a sign of a soft landing, but not jeopardising the market expectation of lower rates in 2024. Bond yields and the US dollar both fell further. China's PMI data indicates that its manufacturing sector is still contracting. Despite this, oil prices firmed yesterday as US data showed falling inventories ahead of the delayed OPEC Plus meeting later today, where the producer cartel will try to agree production cuts among some of its smaller members. In the UK, we had a warning from Bootmaker Dr Martens, who said there is an increasingly tricky consumer environment in the US, reporting H1 revenue down 5% and PBT down by 55%. It noted widespread macroeconomic caution amongst wholesale customers, which means that its full-year revenue will decline by more than previously guided, and it is withdrawing its previous financial year 2025 revenue guidance. Its debt costs will also be higher. Struggling high street challenger Metro Bank announced that its annual cost savings of at least £50 million are up from its previous estimate of £30 million, and it is reviewing its policies of extended opening hours and 7-day-a-week trading. Its plans involve shedding about 20% of its staff. It is also streamlining its board structure. These moves come days after shareholders approved a capital raise as part of the £925 million rescue deal, where Colombian billionaire Jamie Jelinski now takes a controlling stake. Jelinski has a successful track record of rescuing struggling banks in Latin America. He made his name after acquiring the Colombian assets of the failed Bank of Credit and Commerce International in the 1990s.
Progressive Equity Research.